Hello everyone. I'm gonna make a short video here because it's just something that I find interesting. Um, so, I've recently committed to trading. I've taken the loss on my AMC investment a good while ago. I'd say like around this breakdown period during the reverse split news. And since the chart has been so skewed, I still trade the stock because I think it's a good stock to trade. And after being invested in it in so long, I think that I have relatively good or decent knowledge of where it could go. Um, and it's just a volatile stock. So, however, there is something that I've been thinking about recently with, I guess, the algorithmic sequencing of this stock, and that is with regards to a gap that formed way back in November of 2021 during this breakdown. And actually, I remember my first option trade ever was betting that it would go up here instead of down. And I mean, it was kind of a pain in the butt, but life goes on. And so I'm still convinced that this breakdown wasn't genuine, or if it was genuine, it represented a very complex algorithmic, I don't know, law or something. Because, so let me just put the actual chart on unadjusted, right? So the reverse split here is just looks like an actual run up in the price. So this is, just the split. Now, the gap that I'm concerned about here for this video took place right here, this 4-hour gap at 38.80. And I've thought about this gap ever since, I guess, really this March run. I thought that, this March run would fill the gap and then that would solidify the end, right? Because in my mind, filling this gap represented kind of like a sealing the deal kind of thing. If you've seen my video on 1 cent gaps or 1 minute gaps, you'll understand that Webull charting or Webull charts provide a very interesting perspective into price gaps. And yeah, not all gaps are bound to be filled exactly. However, they do represent key levels. And part of the reason why I think, let me just try and figure out where this was. 928. If I go here, let me see if I can find this gap somewhere. It's been filled since the breakdown after the offering. But here it actually is right here. And, I had this marked and I tried telling people about it, but no one really cares, right? Because it's a 1 minute gap. Who cares about these things? They pop up all the time. Most traders will use trading, I think it's called, T-view charting. They won't use Webull charts. A lot of people are, in my opinion, ignorant to this. I think that you should use both because both charting programs allow you to do a lot of unique things. And the whole reason why I use Webull is to get my levels from gaps, right? So I had this marked, and ever since this gap formed, I was convinced that this structure was going to break down in some fashion. And so, I tried trading, the little bits of it, whatever. But, when this ran up, I was immediately thrown to this, obviously, pre-January 2021 squeeze where it broke down. And you can see here that after the double top, it didn't quite exactly go or make a new low beneath this starting point, but it just kind of went and then popped a little bit. And I figured that the 784 gap, or that 1 minute gap that I just showed you, represented this bounce area within the fractal movement. And so, what happened here? Spectacular. It's an incredible thing. I'm honestly just blown away by it. We got that hit off the 784, which filled that 1 cent gap, and now I believe that there's going to be a pop, and it's going to go to about 945, 950 right here. During the, I think was this earnings? I don't remember. Yeah, but during this little thing, I mean that's a whole nother conversation, but nonetheless, right? I believe that gaps on AMC are extremely algorithmic in meaning. It's not, my whole theory is that humans are really out of this market, and that the algorithm will distribute it accordingly to some pattern that it's following, right? And so I think that traders nowadays need to adapt to this environment, which is why a lot of people are struggling, I think, at least from what I hear or what I see. And part of this is because people are too clouded with this idea that human buy orders, or someone needs to come in and buy here. This will go when someone comes in and buys. No, it's already predetermined, man. This 784 gap was set. It was already set in stone. This was just not a genuine run. This was not genuine at all. It was going to break down. Absolutely, it was going to break down. On TView there was a gap here. Actually, I think it was on yeah. So there was a gap here, off of extended hours. You could use that as a reference, sure. But like still, I think that this is a very interesting topic for this stock specifically. And so what I really want to what I really want to look at here is that 3880 gap that formed in the November 2021 breakdown, right? And so what I want to do in order for you to see this, right, is check this out, right? So I go to the adjusted chart, correct? And then you can see on Webull, you have these this insane, just these insane price glitches, right? Where this went to a high of 4,470, right? And then you can see here that the August run went to 271, right? It makes sense. It's a reverse split calculation, whatever. So if we zoom in here, it's still, as you can see on the chart on the right side, it has it locked. If I put my line here, actually, 3878, not exactly 3880 with the unadjusted chart, but you get the point. It's still in that same realm. And so if I go to the daily chart, I believe, can you see where this 3880 level really is here? I mean, I don't really know exactly what to make of this, but I just kind of want to show people, because just look at this level throughout time. If we go back, right? Do you see how well this is respected here? It's almost like the reverse split and the split was predetermined way before. It's like they planned for Ape to be released as soon as this run started, or as soon as this breakdown started, or whatever, because I think that this gap is an incredible consequence, or a coincidence, my bad, and it's just odd to me. So yeah, I think that the market is going to, I'm not going to make a video about it. I'm sure that there are other people out there who have discovered what I'm referring to, but I think that SPY will go to all-time highs. And actually, no, I think it will go to all-time highs. And there's going to be some crazy movements in the future. And when SPY does correct after going to all-time highs, it's actually not going to be the end of it. And I think that what you're going to see here is you're going to see the fractal play out basically perfect. And it's going to be quite incredible. So we're going to have something like this, right? And then you're going to have a breakdown. This is when SPY corrects right at this point. And I think when this occurs, you know, if we want to try and understand or get an idea, a level of where the spring could potentially go to, is if we use the actual chart. You can, I don't really know for sure, right? But actually, yeah, I don't know for certain. Obviously, I haven't looked into it that much, but we could say that like this could be a relatively good level to retest, right? That court decision breakdown, whatever BS that occurred, the split news. This could be a level for a spring here after SPY corrects. And yeah, it's a 50% drop from this target. Maybe it doesn't go necessarily that low. Maybe we could say, I don't know, the level is something more reasonable, like here, right? At 6 there, right? That'd be a 39% drop. That's still great money for puts. And I think what we'll see here is exactly the January setup. But if you know, or if you are interested in fractal scaling or sequencing or whatever you want to call it, I still don't really want to call it fractals. I feel like there's a better name for it. I just can't really come up with anything. But, you know, if we just go into the past, right? I'm sure you're already thinking about it, right? So if we just put this along logically, so you can see that we get that pop and then it breaks all the way back down, essentially to like, for the sake of this video, let me just spend some time honestly doing it. So, you know, it'll come up to meet this this support, this bounce right here at 940. I got 9 calls. I'm pretty sure I'm gonna win no matter what. I think this is probably the easiest moment to trade in the history of all markets. And it'll come back down relatively low, probably to 8.4-ish. Right? It comes right above, it comes just like right above this this little hill. And then it proceeds to run higher than the previous point, up probably to 10. And then at that point, SPY will correct, as you can see, and it will form like a pretty awkward head and shoulders kind of thing, at which point you'll get a breakdown of the market or a correction of the market. And this doesn't have anything to do with fundamentals, in my opinion. And once we get this breakdown, you could I'll probably just step out once it hits 611. I'll just sit on cash and see what it does, and if it bounces here, whippy. If not, whatever. Let's just assume it bounces here, right? Then you'll have your run. And as you can notice, if we just keep playing along accordingly, I think that it will also play out the June sequence as well. And where we really want to go with this first wave, this first January move, is we know that it's already going to go above this double top structure, right? So it's going to go above that. I know there's some weird gaps or whatever, but oh man, how do I... Something that's really interesting as well, and I can't actually show it to you on this chart anymore, but when Ape came out, I really want you to think about this. When Ape first came out, this 38 gap became 24. Okay, I remember that very fondly. So the 38.80 gap was actually 24 when Ape was out, okay? Now, I think that it would be kind of I think it would be kind of interesting to see, you know, maybe this is some kind of maybe it doesn't go to, you know, to 24. You know, maybe it just kind of touches something like this. But, you know, if you know the stock well enough, you'll know that after January, it comes down relatively far. I think it goes below the double top structure. So it'll come back down below this double top structure. uh, which will, coincidentally enough, mark another bearish part of the SPY sequence, and then you'll have your sideways for a couple of months, and the stock will ultimately go up again and replay out the June sequence. And if you go back to this point in time, and I'm just kind of spitballing this, to be honest with you. I don't know exactly where to put this line, but in my head, I know what I'm looking for, and I think that's kind of, I think what that translates to here is that it will ultimately go to fill that 38 gap, right? And so if we go back to the adjusted chart, you'll see that the 38 gap represents a pretty key level here to retest this breakdown. And then after that, I think the stock is dead, just to put it simply. If you can find support on 38.78, I think you'll have potential for a move even higher for some unbelievable short squeeze historical moment. If the theory holds up, you could fill these gaps here. You have a gap at 85.68, and I really do think that all of these gaps have some kind of importance. And with everything that I've shown you, the difference between the adjusted and the actual chart with that corresponds to like the reverse split nonsense. I really think that there's some deep algorithmic functioning going on here, and I think that this is kind of not proof, but it's a pretty concrete theory that human beings have been taken out of the market, for sure. And when I say that, I don't mean like your buy orders don't have any impact. They do have some sort of impact, but they aren't put or rolled onto the tape as soon as you hit that buy, or that sell. Your account will show that you have that in your account. Yes, that's great. But as far as it impacting the market, no. And, I think just to kind of add to that point real quick, the banking crisis here. The banking crisis on SPY during this moment of time, I think that this is also another concrete argument for human beings taken out of the market, because this was a direct moment in time where human sell and buy orders were fighting with the algorithm, which is why you kind of got this choppiness. I think that the market should have made a pretty significant markdown here, but obviously that wasn't set in stone. That wasn't part of the direction. And so the algorithm obviously wins. It always does. So going forward, I think AMC is short term extremely bullish. Short term, very, very short term, as you can, as I previously mentioned, there will be a correction on SPY. And yeah, I know I'm saying it will, because I do think that I'm onto something here, and I'm very confident in my position. And so I think that when SPY does correct, that's when you'll have AMC make its markdown before the January squeeze. Now, something very interesting about that, I do have to admit that there is a possibility that it does fail. And, in part where it does fail, it would be at that direct moment where SPY corrects, or where AMC goes for the spring. So when it goes for the spring, you really have to pay attention. If you're a buyer or you're an option trader, and which is going to be a kind of a tough period in time, is when it comes down here. I think that for me, I really want 5.2 to get hit, but that's extremely low relative to the beginning of this double top structure. So for me, I'm going to be watching 6.1, just kind of just spitball on the level, excuse my language. And so I want to see how price behaves around this. And, for SPY, I think what that will kind of allude to will be when SPY revisits this 420 level. You know, it's going to push to all-time highs, and then when it comes down, it's going to be pretty crazy. There's going to be it's going to be very extremely volatile if someone doesn't or hasn't studied the sequencing of market or algorithmic structure. It's going to be a really hard time. I doubt technicals are really going to help you much, but I mean, technicals are helpful, you know. Um, so I'm not gonna try and start a whole thing there, but we really want to watch once AMC goes up. Oh, it's interesting how there's a gap here. I completely forgot about that. So yeah, it'll come up, fill half the gap, come down, and then end up filling this gap entirely. So, you know, if you play shares, it's a really nice trade here. And then when we come down for that spring, you just want to watch these two levels here. Maybe this is a really critical zone to pay attention to. And if it doesn't have the short squeeze moment where it runs to whatever to 17 to 21 or whatever it can be, I think that moment is the decision of the market. So if it's a crash sequence, then everything just dies, and SPY will go below 348, at which point that would suck. But I think for the time being, everything is relatively solid. I think the FOMC meeting, just to keep in mind, right, is on the 13th. So, you know, we have a good bit of time for bullish trades, but after, just be very wary. I know that fractal sequencing, whatever, is not the most convincing strategy on the market, but I think that it's going to make a comeback. I think more people are getting around to this idea. And so with everything that I've mentioned in this, I hope that I've given you something to think about and you do well. So until next time, peace.